evening, all. Ira Epstein of Linn and Associates with your SPDR ETF wrap-up for a pretty difficult beginning of September. This is September 9th, 2021 at 6 p.m. All right, if you take a look at the indices, they've all gotten hit. This market's gotten ugly. That's the best way that I could describe it. It started off with interest rates climbing just recently to 138 in the 10-year note, down tonight to 130, but the stocks aren't responding. We saw President Biden had a news conference. I watched the whole thing, and they are getting angry and aggressive to people unvaccinated against COVID. So if you're one of those people, just understand, for 2 months I've been telling you they're coming after you. And now they're really doing it in the workplaces, anywhere you want to go. So you have your right to not get vaccinated. It doesn't mean you're not going to feel ostracized. And that was the point I was making. Let's take a look at ARK. Everything in China is creating problems now for this investment. And we know that she was invested fairly heavy in this. I'm talking about Kathy Woods here. And but you saw the gaming thereafter. You know, if a company's making money, the idea there is share it with the state in a big way. The idea of capitalism like we have in the U.S., like they have in Europe, other countries, that's not going to work there. So you've been coming down. You had a pause in the market. That's what an inside day often represents. You've broken the pattern in the market. You have a higher high, lower low pattern. The market's likely going back to the 18-day average in red, possibly the 100. That's my guess. Resistance, 200-day average. Bollinger Bands are not in play. They're far away from the market, as you could see at this point in time, and momentum has turned down in the marketplace. In Apple, with the close today, you lost the embedded reading. My guess is the pros that were in this off of that are out on the close today. Would not surprise me at all. We're seeing so many sectors getting hit right now. You got to be very cautious here. If that stays unembedded, the only day you can get that back, where both numbers get back over 80, is the day afterwards. Otherwise, it's got to go through the whole rebuilding process. And when it's lost, if it's not regained right away, it often means price and the 18-day average are going to make a run at each other. In PAVE, market had a small bounce, a tap this morning. Didn't go anywhere. In fact, the whole market did that. If you were looking at the market between 9 and 12, you had a very different market than from 12 to 3. And I'm talking Chicago times. The game changed. And everything that I watched started cracking and tumbling down. It got to be ugly. In XLI, looks like, you hit the lower band. You might want to go there again. You're oversold. This is an area, and when we were down here yesterday, I said, that's now your support. Your resistance is the 100-day average, and I still see that as being the case here. No change in that. Semiconductors, watch out. See that reading? When you reopen, unless you're up sharply, you're going to lose that embedded reading and be under 79. Be cautious right here. This market's acting like it, too, might want to go back to that 18-day average of closes. POTX returned. I was just this morning with the subscriber saying, I think this market's going to make its return right to that lower Bollinger Band. It's exactly what the market did. You're not out of the bare woods in this whatsoever. Home builders, all you did is go back to the 18-day average. The trend is down. It's a difficult market to get short because you got to risk so much to get so little. I'm not convinced I like anything there, but the trend is down in the market. And could it break? Yeah, it could break hard to the 74.81, 74.65 level. I see nothing bullish on the chart. XLE getting ugly. The market's now got lower highs, lower lows, momentum down. The battleground's clear. It's the 200-day average and the 18. The market hasn't fully tipped its hand, but the overall pattern away from that is bearish, not bullish. There is nothing on this chart right now, even if it were to rally through this 49.29 level that could turn the trend up. You'd end up with a lower low and a higher high. On the downside, 46.12 is still an open target. The emerging markets, well, you lost the embedded reading. Take a look at this. Here you've got the readings, and I'll walk you through them right here. Not embedded there. Day one of embedding, that was on Tuesday. Day two of embedding Wednesday. You don't embed today. So that means the market's likely to head back to that 18-day average for support as it works off an overbought condition. GLD, still a market with a higher high, lower low. Should it break, prices might be looking at 165.73, the lower band. The resistance, the red line, the 18-day average, you've had 3 days in a row of fighting at that number. And with the gold miners today, you had an outside day down. So unless you take out today's high, tomorrow, which was 32.49, or the day after, the odds are in favor of this market trying to leak lower. A potential target could be the 30.90 level. There'll be some window envelopes that I put on the other charts, but I don't show the window envelopes here. That could be a support number. There's nothing bullish on that chart. By the way, I want to come back to that. If you were to take this number out tomorrow or Monday, I'm talking the high right here, that could lead to the 33.28 and be a bear trap. I don't see the odds of strong on that. TLT. Well, all we've done is come all the way back up here from hitting the lower Bollinger Band and getting finally over for a 149.55. You had one shot, if you were listening and following my enhanced Bollinger Band course, if you were bearish, to come out of that market and grab the money one time, and that's all it takes. In FXE, market is now rolled over, so momentum questionable. You have a pattern of higher lows, higher highs. The key is not to take out today's low again on Friday or Monday. If it's taken out, look for a failure back to 109.95. If not, the traders are going to buy this market potentially. I don't know. You're overbought. Why would that attract new money? So I'm not seeing all that. Now, I want to remind you, each morning, you hear me talk so often that I start recording my updates. I moved to 9 o'clock. I used to try to do it at 8:45. It's not worth it then. Why? We have too many government reports to come out between 8:30 and 9 o'clock. So I want to get them all in. So each weekday at that hour, I begin recording, and it takes about 15, 20 minutes to record, about 15 minutes to render, and then it's published to you. You've got the whole trading day ahead of you. Work with that. That's what I say. But how I start you off is with world events. I'm going to tell you what the government reports were in the U.S., where there are important reports out of China, Europe, South America, wherever it might be. I'm going to cover them for you because they do impact the marketplace. Then after that, we start looking and we start covering 40-plus markets. Look at all these markets. You can hit pause if you want to see which ones. I'm always adding. As an example, you don't have Amazon up here. It's there. I'm going to bring it on Facebook back. There's a lot that I bring on. 24 videos a month, each approximately 17 to 20 minutes long. 24 of them, actually, there'll be 20 of them off the dailies, Monday through Friday, where I look at the daily charts. Every weekend, I do the week charts only. So you'll get a picture of the longer term. And when I see a longer term trend kick in, I'll cover that during the week as well from time to time. So $8.95 for the first 30 days, come on. Spring for the $8.95. Go to our website, under the word research. You'll see all my programs there. Enjoy it. I'm Ira Epstein. Have a great day.